Hi, this is Jack. This is going to be my bar-by-bar review of the S&P 500 E-mini futures contract for December 5th. First bar of the day, let me back up. Yesterday, we had a big gap up, a trading range, and then a late bull breakout. The late bull breakout had 4 legs up from the bottom here at 49 and 50. We broke out of the trading range and then got a couple more legs up. And I expect us to enter another trading range up here. It's a small gap up on bar 1, but a doji bar, so probably sellers above, buyers below. As always, better to wait for a few bars to figure out what the market's likely to do. But just looking at the first bar of the day, I expect a trading range, which is why traders sold to close bar 1. Bar 1 was a bull bar, and in trading ranges, anytime something's bullish, it quickly becomes bearish, and then anytime it's bearish, it quickly becomes bullish. So I expect there to be buyers somewhere down here. We're testing the EMA and reversed up, so buying into the close of the bar, probably bearish scalping out. Not a good sell signal bar, so probably a pullback and then a second leg down. 3, micro double bottom, testing the EMA and reversing up. Reasonable stop entry for a swing long, but too early in the day to bet on anything with any reasonable degree of probability yet. So probably sellers above this bar because it just looks too good. So 4, the stop entry triggered and we're reversing down. So sellers above the bar. It's double top with the close of 1 on a line chart. This wick right here tested that price level and then we reversed down. So probably more sellers below this bar and sellers above this bar, but tight trading range in a triangle. So probably more sideways, and whatever breakout we get in either direction on this bar is probably not going to work. Bar 5, a doji bar, and then 6, bull breakout. Reasonable stop entry signal bar for the bulls, but again, it's a triangle open, and we're breaking out of the triangle, so I don't expect this breakout to get very far. Reasonable to buy the close with a stop down here, or maybe at the open of the bar. And it's reasonable to have a tight stop like that, only because it's the open. And if this is a bull breakout, then it should work. It should not pull back to the open of the bar, and it certainly should not pull back to below the bar. So reasonable to get out there, but really not ideal because it's a trading range, and there's probably going to be buyers anywhere below these lows. Immediate follow through on 7, but a climactic bar closing above the high of yesterday. And actually, I don't think that line should be showing up. I'm going to go ahead and turn all of those off. Bar 7, big tail, so probably a pullback, maybe a second leg up. Bear inside bar, deep pullback, testing the strong bar, bull bar on 6 and reversing up, or testing the 1 high and reversing back up. Climactic bar, trying to get a bear breakout. Probably buyers down here for a second bull leg up, but this could be a failed breakout of a trading range and failed breakout of a triangle. And actually, if this is a triangle and this breakout is going to fail, we would probably touch this trend line before we get a second leg up. So probably more sellers above and possibly more sellers below, but this is certainly strong enough for a second leg up. Yesterday we had a buy climax, and now we're going sideways and trying to break out of that sideways range. And it looks like the breakout is failing. We do have a body gap between 77 and bar 8 here, but I expect that gap to close. I mean, it's already closed, but I'm talking about we'll get a close through that level. And then bar 9, bit of a surprise, so probably a second leg down. It's a shaved bar, which in and of itself is a sell signal bar. Reasonable stop entry short for the bears, but not ideal because of the tail, but reasonable. And it works so far. So let's look at the first 9 bars of the day and just kind of assess what's happened here so far. Bar 1, they sold it. Bar 2, they bought it. 4 and 5, bearish, they bought it. 6 and 7, bullish, they sold it. 8 and 9, bearish, so maybe we'll buy it. But the problem is bar 9 is a big bar, and it's breaking below the EMA. We're probably always in short, and whatever pullback we get, I expect disappointed bulls, probably getting out at the high close, or maybe above this bar, or even at the high here if we rally that high. So reasonable to sell the close, stop up here above the bar, because if this is a breakout, it should not pull back deeper than the open of this bar. Now that's kind of a skunk stop, because if the price does reverse up to here, we'll probably find more sellers up here, so it's not ideal. So if you're selling the close with a stop here or there, you need immediate follow through, and if you don't get immediate follow through, you got to be quick to get out. Otherwise, sell a pullback. Bar 10, buyers below 9, reversing up, but look at this. We just got some more information here. If you're a bull, maybe you bought the close of this bar, and then you see 8 and 9, and you're thinking, man, that's pretty disappointing. So maybe there's going to be buyers down here at the apex of the triangle, you know, here, maybe at the low close of 6 or low close of 2, but you see 9 and you think, shit, we're probably going lower, man. So maybe you buy below that bar, or you buy the close here, and your first entry was here, your second entry maybe at the close of 9 here. Then you're going to look to probably get out at the midpoint, which is where the top of this tail is testing. It's also testing the stop entry short signal bar on 8, and for that reason, this is a sell the close bar, or sell above. Reasonable to sell the close, stop up here, or sell above this bar with a stop up there, betting on a second leg down from 8 and 9. So clearly always in short, and clearly more bearish than bullish. Looks like the bulls are trapped and disappointed. We're moving away from this price level very quickly, so that means that a lot of traders are trapped. And it's even reasonable to sell the close of this bar with a stop up here, or sell a pullback for that reason. And we're breaking out of this trading range here, the 73 low, the 81 low, and all of these lows. And we're probably testing the breakout point, 62, high close, and then we've got support here at the low close, 65, and the low of 65, the start of the channel from this bull rally. You could look at this as a spike, pullback, and channel, but here, I think these two legs are actually part of the same spike. Therefore, the start of the channel should be here at 65. And we do have room there. Now, if you sell the close with a stop up here, this is actually below that channel line, or at least it's below the start of the channel. So I'm not sure it's 60% that we'll get there before we get up here. So for that reason, it would be wise to look to sell a pullback. Small pullback on 12, losing a little bit of momentum, but still pretty bearish. This bar closed on its low. There's no reason to buy, and there's no reason to look to buy yet. We're testing the stop entry signal bar, 66 high. Didn't quite get there, and I expect us to get there on the following bar. And we did, and we reversed up. So losing more momentum, but this certainly is not enough to reverse this tight channel down, and there's definitely sellers above. Traders sold the close of 13, and now we're breaking out lower. It could be a higher low double bottom with 65, but again, channel down is too tight. The bears want a measured move down from the breakout, and the bulls want us to find support at the start of the channel or these breakout points here. 15 reversing up, it's a strong bull bar, but what do you notice about this sell-off, and 15 in particular? 15 is the first actual pullback in this entire sell-off. We have maybe a 6 or 7 or 8 bar bear micro channel here, and this is the first bar that's breaking out above the prior bar. So there's certainly going to be sellers at the close of this bar and above this bar. It's a strong bar, strong enough to maybe flip the market to always and long if we get a duplicate bar or good follow through, but I expect it to fail. This is the breakout bar, 15, and the follow through bar is 16. The follow through bar broke out above the prior bar and reversed down. And it didn't just reverse down, it reversed down beyond the midpoint of this bar. So it's nearly undoing all of the damage that the bulls have done with this bar, and I expect there to be more damage because of that. It's a reasonable stop entry short bar. We could get a second leg up from 15, but again, probably sellers above the high of 16. Trying to get a second leg up, good signal bar for the stop entry with sellers above. Instead, traders sold to close on 18. Breakout pullback short, 19. Now we have a couple of legs down. We may be trying to bottom here, but again, the channel down, probably still too tight. This could be a spike, pullback, and a channel starting here at 15, 16. So channeling lower on 20, trying to turn up on 21. Second entry, or maybe a third entry, could be a wedge, double bottom, but I'm not sure that this amount of buying pressure is enough to undo this amount of selling pressure. So maybe sellers above and probably sellers here at the 16 high. Strong bull bar, good for the bulls. Second leg up from 15, channeling higher, but probably a bear flag. And this is the breakout bar, so let's see the follow through. Good for the bulls, good follow through, small pullback and a second leg up. Testing the breakout point 10 and maybe going higher, but probably needs to pull back first. And instead, more follow through on 24. Looks like a buy the close rally. We have micro gaps, tick gaps, and strong bull bars closing near their highs, small tails, non-climactic behavior. So we could easily be flipping into always and long, but problem is we're testing the top of the channel. Maybe I was wrong and the spike isn't these bars, but the spike is actually 8 and 9 and the pullback is here, the start of the channel 10. So this could be resistance and I would be hesitant to buy up here. It also could be a second leg trap in a trading range. If leg 1 is 15, 16 and the pullback is here, and this is leg 2, common for second leg traps to be stronger than the first leg in trading ranges. For that reason, we're turning down on 25, but this is the first pullback in a 4-bar micro channel, so probably buyers at the close and below this bar. Channeling lower, follow through for the reversal. The bulls may be giving up if we get another bear bar. Weak bull bar 27, trying to channel higher, but sellers above on 28. More bad follow through on 29, and then outside up on 30. This is either leg 2 or leg 3, possibly a double top, so I'd be careful buying up here. The problem with outside bars in tight trading ranges like this is there's not much to reverse. I guess you could argue there is something to reverse here. We had an attempt at a leg 1, pullback leg 2, but instead we got a double bottom, testing the EMA and reversing up. I also missed the EMA test on 26 here. The 26 low nearly got there and then reversed up. Pullback and then a rally on 31 could be an implied second leg up, micro double top or a higher high double top. In any case, probably going a little bit higher. Good follow through, 32, probably going higher, and then 33, more good follow through. Clearly always in long at this point, forming a bull channel, spike, pullback, and channel, but risking a double top here with the high close 7 or the high of 7. So we may find profit taking up here. Deep pullback on 34, it's a breakout test of this pause bar, probably buyers below. Bear inside bar with a strong close, might be going lower for a second leg down, reversing up on 30, prominent tail on the top and bottom of the bar. It's a trading range bar in an overall tight trading range, so whatever breakout we get may not get very far. Good signal bar for the bulls, but no stop entry trigger, II pattern. Both are bullish, so reasonable for stop entry with a stop down below 36. Stop entry triggers, but deep pullback 39, overall tight trading range. This may be enough to disappoint bulls and find sellers above these highs. Instead, we're getting the bull breakout on 40. Trying to break above the high of the day. Let's see the follow through. Not bad. It's a trading range bar, but it's a good follow through bar. It's a bull bar. Not the strongest close. Prominent tails channeling higher. Inside bar and then bear breakout. It could be a leg 3, a wedge. So we could be starting to turn down for a second leg down, 42, 43. Pause bar, inside bar, bull bar, breakout test of the 34 body and the 33 high. And if it holds, reasonable stop entry signal bar for the bulls. Stop entry did not trigger. Instead, we're getting a bear inside bar, possibly flipping the market to short if we trigger the short. And then big bear give up bar on 46, breaking out below many bars to the left and the EMA. Probably a sell to close bar, but could be a breakout test of the 24 high, so you've got to be quick to get out, probably better to sell a pullback. And instead, more climactic follow through on 47. 47 is a big bar, but it could be a second leg trap in a trading range. We vacuumed down to the bottom of the range very quickly, and that is not sustainable behavior. We might go a little bit lower before we reverse up, but probably we'll find buyers before we get to the EMA, and maybe by the time we get to these lows. 48 turning up, good bull bar, but maybe sellers above. Channel down is pretty tight. Deep pullback 49 in a rally. More information here. If you're a bear and you sold the close of 47 with a stop up here, then you're disappointed with 48. You may sell more, or you may just hold short and then look to get out, break even on your original entry. And that's what happened here on 49. So reasonable to expect more up from here, but probably a pullback. Small pullback in a rally, but decent follow through, 50-51. Trying to get the bear breakout for leg 2 down. Good signal bar for the short and reasonable. Testing the EMA here, micro double top at the EMA for leg 2 from the sell off. But I don't know. This is 4 bars up and they're all pretty strong. So probably buyers somewhere down here. Good entry bar for the bears, 53. but tail, so maybe we need to go sideways before we go more down. And instead, a climactic bar, 54, testing the bottom of the range and reversing up sharply. I expect probably one more bear bar before we get some more up. 55, again, testing the low close, low of the range and reversing up, small tail here, so probably buyers down here. And then a big bull surprise on 56. Problem with 56 is it vacuumed up to the top of the range. And if you're a bear, you got 2 legs down, you probably have to cover above this bar. But if today is going to be a trading range day, which so far it certainly is, if you just look at the chart, you can see all we've done is go sideways all day. Up, down, big confusion. It's a trading range. So probably more sellers somewhere up here, especially after we turn down 51. 57, deep pullback, and then a pause bar, 58. Probably disappointed bulls above. 59 breaking out, but then 60, big bear bar. So this is what I was trying to talk about earlier on the open, where there's a triangle, and as soon as it's clearly bearish, something bullish happens, and that's what's happening here. The sell-off from 45 down to 47 is super bearish, but then it got quickly bullish. And then 48 to 51 is super bullish, but then it gets super bearish. And this is what happens in trading ranges. You can also see that we're forming a small triangle here. So that means it's breakout mode, and whatever breakout we get may not get very far before it pulls back. So 60, probably buyers below, and exactly what we got on 61. But deep pullback into 60, we may need a second leg down, but whatever second leg we get, I expect there to be buyers because we're in a triangle, and we have a lot of buying pressure here, and bad follow-through for everything. It's a trading range day, and I expect it to be a trading range day until it's not. It's getting late in the day. It's about 2:30 here, so we'll probably get a breakout soon, or maybe we'll just keep compressing the range into the end of the day. But so far, a lot of the bars today are pretty big. A lot of the small pause bars didn't last very long before we got some pretty good movement. So probably the range will continue to expand. But 61 pulled back to the bad sell signal bar low and then sold off. But if you're a bear and we start to rally, you probably want to cover above that bar. And that's what's happening here on 62. Good bar for the bulls. It's a shaved bottom, so that means that traders bought the close of 61 and 62 shot up. Problem is it tested the EMA and then sold off a little bit, and we're still inside of the bear trend line in the triangle here. 63, traders sold the close of 62, and I imagine traders will buy the close of 63 or buy below it. 64, channeling lower, a couple of doji bars, and then a failed bull breakout on 60. We could be looking at a higher low and a failed bear breakout of this triangle, so we may get the bull breakout, but 60 is a good signal bar for the short. Probably better to wait for the breakout and then look to get in on the pullback. Failed bear breakout 67, so we have trapped bears. Any bear that sold below 62, you didn't really get much of a scalp, and then if you sold below 66, you've got to be disappointed with 67. So unless we start to turn down, bears are probably going to have to cover above these highs, and that's what's happening here on 68. So 68, good for the bulls. Still inside of the triangle, believe it or not, all of this time, we are still here at the trend line. I'll just go ahead and draw it. Right below the EMA, so possibly sellers above, but bullish enough for a second leg up. Instead, traders sold the close of 68. 69 is trying to break out of the triangle, but failing again, so probably buyers down here. 70, channeling lower, failed bull breakout on 71, and we may end up getting the bear breakout, the second leg down from the 42 sell-off. 72, getting the bear breakout and closing below everything to the left, but big tail on the bottom of the bar. And look at what's happening here. We closed exactly at the same price level. Let me go one more bar. The close is 60.90, and this low is 60.90. So bar 72 broke out of everything to the left and reversed up and closed at the exact same price as the low of 65. I mean, it's just fascinating. How can the market be that precise? It's just incredible. You know, and people talk shit about technical analysis and that chart patterns don't mean anything and all of this price action stuff, none of this is impossible. Well, explain that. Why is the market turning up from this exact price level to the tick? I mean, it's just uncanny. You can't say that this is not real, not happening. It's happening right in front of our eyes. So anyway, we got the bear breakout of this triangle, but look at the breakout, 69 to 72. This is not a strong bear breakout. And then the big tail on 72 explains why traders bought at that low and bought above the bar and bought during 73. This bear breakout is 2 legs down in an overall trading range, a second leg down from the sell-off since 43, and we're reversing up. It's a weak close at support, the start of the channel. It's a spike in channel bull trend that evolved into a trading range, and now we're reversing up, probably going to test these highs and maybe the high of the trading range. Good follow through, 73, 74, 75. Doji 76, but probably buyers below. Instead, it looks like we're getting a bull give up bar. Looks like we're holding the bear trend line as well. We're trying to break above it, 75, 76, and then we reverse down. But probably we'll find buyers down here for a double bottom. But 77 looks strong enough that we could get a small pullback and another bar down, second leg from the bigger sell-off. And that's what we got, 78. But 78 is a doji bar. It's a reversal bar, and we may find more profit taking down here at the 78 low. 79, more follow through for the bears, but it's leg 1, pullback leg 2, pullback leg 3 at the higher time, at the higher time frame EMA. This time we're testing into the spike. So now this whole chart may be evolving into a trading range. Tough to say what to do here. I mean, it's the end of the day. I wouldn't be doing anything, but I imagine sellers above, and we're probably going a little bit lower. More follow through on 80 and then 81, a bear bar. Pretty bearish close. So leg 1 sideways, fake out, another fake out, and then leg 2. This is really trappy here. This would be really tough to trade. Really interesting day overall. I mean, it's really fun to kind of peek at the charts throughout the day. I was setting up my multi-charts and running into some technical problems, so I really didn't get to focus on the market like I wanted to. And that was a little disappointing, but you got to do what you got to do, right? So, yeah, trading range day overall, and lots of good swings here. I mean, there's 3 solid legs up for the bulls here, and then a couple of really good legs down for the bears. Good stop entry signal bar here. You know, there's a few good stop entry signal bars, but, you know, some of these bear legs here, the signal bar is a bull bar, and it's really not ideal, so tough to do anything. But anyway, that's the review of the E-mini S&P 500 futures contract for December 5th. Thank you.